Hello, this is Wong Swee Jiao, CEO of PC Financial. So today I'm back with another segment of the market update. Now, the US-China trade wars remain very much in focus, and one of the results of it recently is that for the month of August, the US stock market has had its first decline since monthly decline since May. So generally, previously before this, actually the US stock market and the US economy in particular is one of the remaining only things that have managed to stay positive despite the rest of the world's markets and economies generally all seeing slowing growth and declines. So the US is almost like one of the few remaining major market bright spots in the global stock markets. However, for the month of August, even the US stock market has also seen a monthly decline, and this is the first since May. So increasingly, I think the tariffs, the ongoing US-China trade wars is starting to have an effect even on the US stock market as well, which has previously been one of the few resilient stock markets. I mean, the latest round, we are seeing US implement further tariffs on China, various China goods, including clothes and such. And in retaliation, China is also raising further tariffs on US imported oil. So you will have this tit for tat situation continue onwards, and I'm not sure where we will see the end of this, because at this point there's no easy resolution to the US-China trade wars. Now, from an economic standpoint, the US economy is actually still holding up very well. In fact, it's the US consumer that is basically propping up the entire US economy right now, because the US economy is largely domestic driven. It's not really import dependent. So the US consumer is basically propping up the entire US economy right now. If the US consumer starts to lose confidence and pull back spending, you will actually see the US economy then experience some decline, and then you will see the stock market actually being hit even further. So at this point in time, the US consumer is still relatively strong and still holding up, and also unemployment numbers are low in the US. In fact, employment statistics are very good. So this is one of the reasons why you have a situation whereby the bond markets in US are panicking, and sort of they are actually declining, showing that US is about to enter recession. But on the other hand, the stock market is still holding relatively well. Previously, it was pushing all-time highs before the month of August. Now, if US can remain in this current situation whereby you don't actually see a huge decline, we may actually see some sort of rebound from global markets. However, all bets are off if the US consumer either stops spending, if there are further tariffs resulting in further stock market volatility or declines. So I think at this point in time, the most important thing is to remain diversified, adopt a more medium-term view. With that, I end my presentation. Thank you.